Hello everyone, this is Juan Sarmiento and today is Friday, July the 22nd. Let's get started by looking at our current positions. You'd recall that I left AXP with very little capital in it. You can see here AXP and see the amount that I had in the market value. That is what is at risk. We can lose it all or we can make some additional profit. Now 14.23, and the curious thing is that we had earnings, they beat expectations, the stock jumped, and by the structure of my position here, it was delta positive 62, and now the day after, you see that we have a profit of $420 that I didn't expect to get. I was just, it was pretty much like a lottery ticket, little to lose, little to gain. And the position has expiration here in July, and the back month options are in September. Would I enter a new trade? That's the question. And you can see the stock jumped with earnings that beat expectations by about 20 cents, which is less than 10%, but still quite good. And the volatility has dropped. If I were to enter a trade on top of what I had, well, look at it. What would I do? Well, I would choose a trade with 90 days to go, which will be in October, and the front month option of at least 30, around 30, so 28 would work on the 19th of August and on the 26th. So what would be my strike price? 155 is the closest to the current stock price. So I would select this and say buy custom Gini, and then analyze that. And as you can see here, it will be October for the longs and August for the shorts. And then we have the options here. The volatility is pretty good, around 30. That's not too bad. But obviously, we would change the delta on that. So if I deselect that, my delta currently is 67. All right. So what would I do? Well, I could sell the put. I could first eliminate or get rid of the existing position before I enter a new one. For example, I could close the put side, which is a put calendar, okay, 65, okay, and by doing that, I'm reducing my deltas quite a bit. See that? That's good. We could also eliminate that 135 put, which is like a lottery ticket. Obviously that's not gonna stay there forever, so let's close that. Press the control key, and here is my 135 put that I'm gonna simply sell. Control key and press on the bid, and it's added to this 3-point position, okay? And then the call side, we do something similar, but we do them separately because I have 5 legs to this trade and may have a limit of 4 legs. So I select the call and select the other call, and I said analyze closing, and it should be a calendar, call calendar, except that we're gonna sell 2 September calls. So you have to adjust that, custom, and say 2. Great. And it was supposed to disappear. I was supposed to get a straight line. Okay, the put here, it needs to be 135. Okay, so we end up with a straight line. Okay, so we enter those two positions. They're about the same price, you know, so they really need to go separately. And I set that up. In the meantime, I'm going to copy this position here and I'm going to take it to my spreadsheet. And I have a spreadsheet here. I'm just going to duplicate one here. And we're going to call it AXP. And paste it here. Great. All right. I have all the other information that I want. So let's say sell one contract, buy two, and the price is 30.38. 30.38 times 1 times 100. And you can see that that's below what I need, what I could sell. We have my account value is 103654, so I could triplicate that, make 3, and that's 9100, which is less than 10% from my account. Okay, now we need to complete the spreadsheet. The earnings expectations, well, let's go to the chart here and revise this here. We hover over this light bulb, which is the earnings, and you see that it's 231, 237 versus 257. Okay, so we take that number and put it here. The expected was 237 and the actual was 257. There you go. And that's 8.4% earnings beat. Okay. Now, that's not too bad. That's doable. Okay, so that's acceptable. The stock jumped 5%. So that could be 10, could be better, but okay, let's see what the volatility is. Let's see if everything else figures. Oh, we got the call side eliminated. Okay. The put side should fill very quickly too. I'm not too concerned because it is very delta neutral. Okay, so I don't have to rush into anything. Like if I was concerned about losing money, if it was one-sided, let's say too high deltas, then I would go and modify my trade to get out of it right away. But in this case, let's we have the earnings, we have the volatility skew here. So for the back month, I'm going to write, you see in the bottom right corner here where my cursor is, that's the volatilities that I'm going to enter here. Okay, so 36, 13, 33.48. Okay, those are the volatilities of the back month options. Okay, and then the front month options, 33.61, 32.31. Okay, those are constantly changing, but I'm sure it will be as a result will be very, very close. And it says here the difference between the two volatilities is 1.845. This is a volatility skew that is unfavorable, but it's less than 3%. So it is quite all right. If this number was 3, then I would say no, that's negative. That's not good, too good. Okay. But you can see I said do not trade here, and I say trade here. That's my result. Let's put the liquidity. For the liquidity calculation, you simply create a duplicate order, and then you see mid and natural. And so we're going to put here mid is 30.5, and the natural is 32. And yeah, that's a rather large liquidity issue. The liquidity is not too strong on that, and that is a strike against this trade. Okay, and so do not trade. Only one thing is allowing us to do the trade, and then the current IV percentile. We go to the trade tab, scroll down until it says current IV percentile. That's 32, and my trade, existing trade, is now out. We don't have anything, and we are deciding that this trade is not that good because the volatility is skew here. The current IV percentile is 32, and that's too high. So if I enter it here, 32, it says do not trade. So we're not going to enter a new trade on that at all because my spreadsheet tells me not to do it. Okay, it's the blame this spreadsheet. Okay, let's go to Costco. Let's analyze the trade here. Okay, let's see. Let's go to the monitor tab, account statement, and go back a good 60 days or 30 days, something like that. Oh yeah, it's a single trade, and you can see that there have been no adjustments, and I don't need to enter a new trade. This trade itself is $9,235, which means it's right there at the top of my range for amount of money that I'm willing to spend on a single trade. And you can see that we have $25. It is at the top of the cone here, so there's nothing to do here. We just wait. All right, and then this trade was entered on the 15th of July. That means a week ago, so it's a very new trade. And then DG, okay, this is an adjustment, so let's go back 60 days, and there it is. Okay, so we have this trade plus an adjustment plus a roll up. If you want to calculate your cost, well, you can see 4560 minus 480 minus, and this is one-sided, so let's analyze everything. Okay, analyze trade, and analyze trade, hide the position, and this gives me the current value of my trade is 97.52. That's how much profit I had on it after the adjustment. Okay, and you can see that it's delta negative. Do I think this stock is going to go down? Yes, I think so. Well, it might take a little while, but it's sort of forming a double top here. I have to see. The stochastic is pointing up, but it's moving sideways. We'll have to see. You can invert this trade here, analyze opposite, and you can see that I sold it. This is my roll up, okay? Which roll up? Yes, because I was 230 to 250. Now it's at 250, okay? And so what would I do to make it delta positive again? Well, restated the previous trade. Yeah, and that will give me $11, 11 delta, 11. Do I think the stock will go up? I'm not too sure really. You have this stochastic pointing up. The stock is trading above the Ichimoku cloud. You have the limit of the previous high before. That's a very high resistance there. We could have a double top. Okay, so I think we could correct back to what it was originally. Okay, so you can see we got a credit of 14.10 and now is 13.35. So we got a little under $1 in profit on that one, and my delta will turn positive again. Or what I can do is actually put a higher strike price, but not by much. Let's say 245. A lower strike price, that is 240. And then we spend only $6, and you still have a delta, more delta neutral. Yeah, I think we could do that. Okay, so that my strike price, instead of 230, I put it up to 250, and now I'm lowering it a little bit as I see that my deltas are negative, and I don't like that because the stock is been rallying. Okay, or we can just leave it alone. That's my two options. I think I'm going to leave it alone. Okay, I'm tempted to say that the stock will rally, but I'm doubtful that it will break to a new high. Okay, in any case, it's a profitable trade, and you can see DG here. Year to date, $42, not a lot. Okay, I'm going to leave it alone. Let's move on to enter new trades. Okay, I have some that I have considered here. CSX. First of all, let's copy the trade here and then adjust it. Okay, first of all, is that a good trade? Well, we need to be really in the center, as close to the center of the, 30 would sounds all right. 30 is my strike price. If you look at the potential strike prices, here I would say that 30 is about okay. Okay, let's leave that as is. You can see that the volatility is fairly low on all of the all of the legs of this trade. And then we have August 19th. That will be 28 days, and November 18th. That will be 119 days. Sounds good. Would I trade this? Well, let's look. The stock jumped on earnings rather strongly. Let's see what the earnings was. We were expecting 0.46, and the actual was 0.54. Okay, so we go to the spreadsheet and enter. The expected was 0.46, the actual was 0.54. And you can see that my difference is more than 10%, more than 15%, 17.4. That's pretty good. Okay, so trade. The company beat expectations, that's why it's jumping so high. And as you can see here, if I go to possible candidates and enter it here, CSX, there you go. It's come from 27 to 31, so that's a pretty good jump. Okay, it's definitely more than 10%. Okay, so let's go to the Analyze tab and copy our volatility skew here, in here. Again, volatility back month is the first two here in your bottom right corner, and the back month are the two bottom skew volatilities. So let's enter it here. 32.2, 27.96, and then 32.19, 28.18. Okay, so the difference is actually negative. Very rare to see that, and that just means the skew is in my favor. Okay, how about liquidity on this trade? Create duplicate, And we go here and we see that the liquidity mid is 6.33 versus natural 6.75. And that's a little high, 6.2%. So you would say do not trade, that's not liquid enough. And then you have the current IV percentile. Let's go to the trade tab, scroll down, 27%, that's not good either. And in this case, we have too good, too bad, but you know, look at the earnings skew and the 10% increase in the stock, more than 10%, is pretty good. Okay, so let's look at one more time at the chart, and I think it's a very good chart. The volatility has already dropped. It says 27, but really we have had volatility of 46 recently, and it could go back there again. Okay, so I'm taking a risk here because it's not liquid enough. Then I say create duplicate, and we're confirm and send. We're looking for, this is $600, so we can do 10 of this. Confirm and send, and then you say, in order to calculate how much I'm going to spend, say multiple, okay? And that shows you in your account here, one, the buying power effect is 636. So you increase this until you get to 10,000. Yeah, that will do, that's exactly 10%, okay? So let's send that off. Let's take a look. If it is too complicated, I'm not going to get too excited about it because it's a little hard to in the liquidity. Okay. Okay. Let's do the next one that I had studied here. DHR. Let's copy that. I'm going to move really quickly through here, so I hope you can follow. DHR. Look at how it's breaking above the Ichimoku cloud. That's really good. 232.35 versus 2.76, I believe it was. Yeah. Okay, so then we enter it in our spreadsheet here. $2.35 versus 2.76. The difference is 17% as well. That's really good. Okay, then volatilities. $33.34, $28.38, $30.38, 28.27, and the skew is more than acceptable, so it's another trade. Liquidity might be low. Create duplicate, and we enter the two data here. 67.15 for the mid. I'm copying here from here the lower middle corner of your screen. 69.6. Okay, that's 3.5. It's a little high. Normally I would take 3%. And it sounds to me that the current IV percentile will probably be low, but it's sort of middle of the way. I'm very tempted because it's moved so strongly over the Ichimoku cloud. So let's go to the trade tab. It says 43. That's just too high. Okay, it's just too high, unfortunately. I can't justify it. You see, the volatility can still drop quite a bit. So no, we could wait for it and see if next week we have it becomes a better trade. So I'm going to put DHR here. Okay, let's see who else. C. Okay, that's Citibank. Let's copy that. Again, I'm gonna go quickly through this, so don't waste time on potentials that might not turn. Okay. Volatility is quite low. Let's look at the chart. Very strong move too above the Ichimoku cloud. Volatility is here at 33, again pretty low, midway, but you can see that the previous spikes were really strong, and that could happen again. Let's go to the Analyze tab, bring the chart here and do the earnings. The earnings was what? Okay, that's really good. 1.674 versus 2.19. So 1.67, let's say. 1.67 versus 2.19. That's a big jump in earnings. So that's strong. And let's look at the chart, the volatility on the trade. 34.87, 31.34. You can see the volatility here in the corner as usual, in case you've forgotten. 29, 57, 34, 56. And the difference is 1. That's quite acceptable. Liquidity might be create duplicate. Yeah, it seems like liquid enough. It should be. It's a big stock, meaning a blue chip stock, widely traded. 2.7, that's perfect. And then the last thing we need is the volatility skew, and that's 29. Still a little high, but considering that everybody else is really good, I'm going to have to take it. Okay, then we go to the Analyze tab. And let's create that trade. Create duplicate, and then say confirm and send. We say multiple accounts, so we can see my buying power effect. Okay, I can do 10 of those. Perfect. $10,000 on that one. And send it. Let's see how it's going here. Let's give that a chance to see. CSX may be requiring a little adjustment. And Goldman Sachs. And then after Goldman Sachs, that's really AXP. And let's do a Goldman Sachs, and that's it for today. All banks. Okay, let's copy that. Again, I'm going to go quickly through this. As not to get you too bored. And Analyze trade, and there it is. Great. Okay, so that's I see the volatility is pretty good. Let's go to the chart. Big jump after earnings. The earnings was, volatility has dropped really well. Okay, it's 29, so that's good. The earnings was 6.99 versus 7.73. That's probably really good. Let's see. We go to the spreadsheet, on the table if you wish. 6.99 versus 7.73, and that's 10% increase in earnings. Great. Now we put the volatility skew here. Enter it here. 32.14, 39.5, 33.66, 29.48. Great. So what do we have here? Minus 75, so that's in our favor slightly. Okay, and then liquidity again, create duplicate, and then it shows my bid and my natural here at the bottom. So my mid is 58.28 and my natural is 59.7. That's 2.4, very acceptable. And then finally the trade tab, 21%, pretty low considering how the volatility has been lately. So 21 is still not acceptable because I have it set at 15%. And really, I would set it at 21 because the volatility has been so high, I would have to adjust that. But I'd rather leave it here and make that judgment on my own. So I would say, yeah, let's trade that because we have so many positives here. Let's adjust. We can adjust because the stock is trading more than 320. That was my city group that was filled. Let's adjust this price to 320 or even 325. Yeah, let's do 325. It should be very similar. And our price should be lower. Okay. Let's look at the volatility. Let's put that again. 29.73, 27.65, 29.768, okay, and then 28.01, 28, 25.85. Yeah, it's still acceptable. Liquidity 57.4. Well, let's do this, create duplicate order, and then we see our mid and our natural at the bottom of the chart of the screen. 57.35, 58.55, and that's 2%. Yeah, I still will trade it. So now we need to perhaps do 2 lots. To do that, create duplicate order, confirm and send, let's say multiples, so we can easily adjust. Jeez, that's too much. Okay, we can only trade 1, unfortunately. It's close to 6,000, so we can't really duplicate it because then it will be too much above our account. So let's enter that. And that's about it. I will adjust these 2 trades in order to get them filled before the end of the day. The C got, well, let's try. Well, you see the CSX is already above the current price. So that's where the liquidity is a problem. It should have filled immediately if it was liquid enough. So I might not enter it. I might not succeed on that because it's not liquid enough, okay? We did have that issue discussed earlier. But this one we can adjust. Cancel, replace, unlock it so that it goes a little higher, and then send. And then I'm going to let it be. If I need to, I will raise it a little bit. But the CSX, okay, that got filled. So the CSX, I'm going to let it be there. It's already above the working mark, so I'm not going to erase it anymore because it's not liquid and we might have issues with liquidity. Let's just say that currently we have 1, 2, 3, 4, 5 trades. We got rid of 1 AXP and we adjusted nothing else. You can see here my orders that got filled. I simply eliminated my AXP and decided not to trade because my conditions are not matched. My spreadsheet is not that good for AXP. That's all for today. Thank you very much for joining me and see you next time. Bye-bye.